Good evening and welcome to the Silicon Valley Entrepreneur, a series of conversations with startup founders and the investors who fund them. I'm Chris Gill, President and CEO of SVASE, the Silicon Valley Association of Startup Entrepreneurs, and tonight I'm delighted to have with us Cindy Padnos, Founder and Managing Director of Illuminate Ventures. Cindy, great to have you here. Thank you for coming along.
Thank you for inviting me.
And when we were talking earlier, the reason for asking you on the show is that you've recently done the research and put together a white paper on the impact of women in startups. Can you tell me a little bit about how you got into that and what the results were?
Sure, I'd be happy to. We released the white paper just in February and completed about 9 months of research prior to that to put it together. The impetus to do it was actually really to satisfy my own curiosity and interest around how big is the market in terms of women entrepreneurs in high tech, how fast is it growing, what's the actual performance of those women. And when we began that process, we actually sought out from various other organizations who we thought would have the data, the information. It wasn't readily available, and we needed it as part of an overall strategy that we had in mind, and so we decided to do the work ourselves. The findings were actually quite remarkable. We researched over 100 existing reports. We did some of our own data gathering as well. And it demonstrates, in fact, that women founders and co-founders, both of high-tech corporations, start those companies with significantly lower resources. They grow them at roughly the same level as those founded by men. And they have successful exits, again, at roughly the same levels. And so we were very interested in better understanding this frugality, if you will, of women entrepreneurs, and also their overall performance and growth, the funding levels behind them, et cetera.
So from what you've just said, if I've got it right, that the performance and the exits are the same, but the cost basis is an awful lot lower. Is that right?
Well, the original cost basis. So
okay.
The initial startup costs for those companies tended to be 30 to 40% actually lower than companies that had solely male founders involved. And we're not entirely certain of all the reasons behind that. Some of it may have to do with women not understanding the value of venture capital, for example, and therefore surviving on debt. It turns out in the United States, in businesses that have over $1 million in revenue, those that are founded by women are literally twice as likely to take debt capital versus equity as those founded by men. And I think we all know, especially here in Silicon Valley, that debt capital is going to not only bring lower amounts of cash into the business, but also just not provide so many of the other resources that are valuable that you gain from having people around the table that can help you to accelerate your business.
Okay. That's really very interesting. Were there any other aspects of women entrepreneurs that came out from this study?
Quite a few, as you might guess, because we looked across a wide array of areas. We tried to understand, for example, why there were so many myths about women not being entrepreneurial. When, for example, today in the United States, 40% of all privately held businesses are women-owned. And we wanted to better understand why it was that there was not a similar number or even close to that percentage of businesses that were venture-backed. So I don't know if you're familiar with the numbers, but roughly 8% of businesses today in high tech have women co-founders that are venture-backed. And as well, if you go even more deep into the data and look at those that have a woman CEO, it's roughly 3% of venture-backed businesses. So they're very, very small numbers. And yet this huge disparity of 40% of companies are founded and led by women. So the myth, of course, is that women aren't starting venture-backable businesses, that they're building bake shops and hair salons. And it turns out, in fact, that's really not the case. The actual proportion of companies in the various services sectors, manufacturing sectors that are supported by venture capital are relatively similar, male versus female, in terms of who's founding those businesses. We then did some further looking at are they not the ones that are building the intellectual property. And in fact, there's some merit to the fact that women are gaining engineering and technical and science degrees at certainly a lower ratio than men. But the encouraging news, I think, is that those numbers are growing very rapidly. We looked at data from about 30 years ago versus today, and if you look, for example, at MBA degrees, which is what my background is, it's not purely technical, women now represent 5 times the percentage that they did 30 years ago of the graduating classes. If you look at engineering degrees, it's even more dramatic. The numbers have grown 15-fold over that same period. So there's a great deal of growth there. There's perhaps a lot of pent-up demand that we think is quite interesting to look at from an investment perspective. So
what do you think the overall result is then for a startup that has women founders or co-founders involved? What's the resulting benefit?
Well, I don't think it's about purely women. I think it has to do with gender diversity overall. One of the findings that was just so strongly illustrated by many of the reports that we reviewed for our work was that gender diversity dramatically improves the performance of a business. It also was shown to demonstrate simple decision-making in teams. And in fact, to me, the most interesting research was done at Cornell University that looked at decision-making in teams where innovation was a really key component of the process. And it actually found in a wide array of organizations that they looked at that those organizations with greater gender diversity were much more innovative. Better performance, better innovation. To me, if you're an investor, and especially if you're investing in high tech, there's nothing more important than supporting the innovation process. And so again, I don't think it's just about women. I think it's about creating an environment where men and women can collaborate and work together and generate really exciting ideas.
Okay, and you've in fact walked that walk because you were a serial entrepreneur. How did you get to be a serial entrepreneur? What was your path to getting there?
It's a funny question in some ways because I started out in a family-owned business many years ago, obviously back in Michigan, that was very, and still is today, very entrepreneurial. The part I'm laughing about is a serial entrepreneur. In my family in Michigan, that was more a question of can't she hold a job? So you have to understand that the environment there in terms of expectations is very different than here in Silicon Valley.
Right.
Here that's a plus. There it might be considered a minus. But I have had really 4 careers in my life. I started out in corporate America. I then moved into management consulting, which is when I moved here to the Bay Area and had fabulous opportunities to work across an array of businesses in that role and fell in love with the software industry. So from there I moved into the software world and spent about a dozen years with a variety of companies in companies that literally every company I joined, it went from relatively large companies, smaller, until I founded my own. So that was a very exciting process to be a part of Scopus Technology, for example, pretty close to the ground up. I think I was employee number 20 there, up to their IPO, and then being recruited to be a CEO for the first time, and then founding and being CEO of my own company. Okay,
so when you were doing that, were you part of the technical staff, with the management? What role were you playing in all of that?
Good question. I don't have an engineering degree, as I said. I did my master's at Carnegie Mellon, which is a very quantitative MBA program. But it gave me an appreciation for technology. And directly out of graduate school, I went into AT&T, so immediately into the high-tech world of telecommunications initially. And my entire career, I have had an interest and a passion around technology and never been afraid to dig in and really understand that part of the business. So my roles have been primarily sales and marketing management until I was a CEO, and then obviously moved into venture capital. But I think what I brought to the table in part was an ability to communicate between the technologists and the market.
Okay.
to really deeply understand the technology. I couldn't build the products, but I certainly could understand them. And I absolutely understood the customer requirements and could translate between the two.
Okay. So what was the impetus that took you to do your first startup? The one that you first founded or co-founded?
I think I finally decided that I had run out of excuses.
Okay.
I think, quite honestly, there's two other myths here about women. One is that you have to be a technologist to be a founder. And that certainly isn't true for me, nor is it for many of the women founders that I know. But we generally, if you're building a technology company, would team with a great technologist, which I certainly did on our founding team and part of the team that we brought together. In terms of the impetus, I had some really compelling product ideas. Mm-hmm. And I felt as though the only way to bring those to market was to build a company around them. And the other part of the myth, I suppose, that isn't so much myth is that women do indeed feel a need to have proven themselves, to have gained a great deal of experience typically before they launch businesses. One of the things that pieces of data we found in doing our research for the white paper was that women in general actually start businesses about 10 years older than men. An average of 35 to 45 rather than 25 to 35. And I'm pretty much living proof of that, but so are many of the other women founders I know. I see that changing today pretty dramatically. Groups like Women 2.0 mm-hmm. That have gone from 0 to 10,000 members in just 3 years or so. All of those women are from that next generation, and the research, the data I saw about that organization, all of them have degrees of one kind or another, and virtually all of them have existing management roles in high-tech companies, mm-hmm. and all of them want to be entrepreneurs. So that's pretty exciting. But if you look, historically, that really wasn't the case. People waited a lot longer, and I guess I finally had my chance.
Okay. Now, one of the things that investors look for early on is the founding team. How did you pull together your founding team for the startups that you did?
Well, I only personally launched one company, and it really was through people I knew, mm-hmm. through relationships. I think to have people who are that core part of your management team that you either have known previously or who come personally recommended by people you know and trust is absolutely critical. And I was very fortunate to have access to some great talent. The women who joined us running product marketing, our VP of engineering, were just very, very talented people, and they were not founders of the business, but effectively became that in the kind of roles that they played.
Okay, all right. So having done that, how did you then transition into venture capital? Well,
we actually sold the company that I had founded to a public company mm-hmm. in 2000. And I had to make a decision then what was next, and frankly, didn't know what I wanted to do next. So I had the good fortune to be invited by some venture capitalists that I knew to work with them on a significant project. And through that, developed my own, I guess I call it a little bit my own Kaufman Fellows program.
Okay.
Because I became effectively a venture consultant or venture partner to several different firms. I did projects with a variety of firms you would know here in Silicon Valley, with Scale Ventures, with Bay Partners, with USVP, Moore David Howe, and others. Mm-hmm. And through that process, fell in love with venture. I have to say the partners that I worked with in those firms were very generous. I had two criteria for the projects I would take on. They had to be in sectors where I could add value, and people really, frankly, needed to be willing to teach me the business. And they were very generous in doing that.
Okay. And why do you think they came to you? Because there's a lot of talent in Silicon Valley. Why did they come to you to do this very important role?
Well, the first project I did was at Placeware, mm-hmm. Which was a company at the time that was doing about $30 million in revenue. It had just missed the IPO window through the result of 9/11, and the IPO market just shut down. Their largest competitor was WebEx, and they had just gone out. And so the board of that company, and they had about $90 million of venture capital, so it was had been a very well-funded company, was seeking to identify an exit strategy for the business. Mm-hmm. My background was such that I had an interesting mix of skills that they were looking for. I had been a founder and CEO. I had been a management consultant doing very strategic work. I had a background in telecommunications as well as software and collaboration software, which was a part of what Placeware was doing. It was web conferencing. And I think it was that mix of skills and ability to step in at the board level and work with the board on a strategy that made that possible.
Okay, so you served an apprenticeship over a number of years, working with a number of companies, had some mentors on the way through.
Right.
So how did you arrive at Illuminate Ventures?
Well, I made a stop in between at Outlook Ventures.
Okay.
I was initially a venture partner and then a director of that firm. Had the opportunity to join the two founding partners and invest out of a $140 million fund. I brought in 4 of the 7 new investments that we made during my tenure there. And when that firm decided not to raise a new fund, I had been invited to join as a full partner on that team, but they were not going to go forward. I decided to launch Illuminate.
That's terrific. And are you currently investing? You're in the fundraising stage? Where are you with that currently?
So we've actually made 4 proof of concept investments already.
Terrific.
They're very exciting companies. All of them are relevant to our overall investment strategy. They're all in the sectors we care about. They are representative of this gender diversity that I talked about. 2 of the companies have women founder CEOs, 2 do not. And 1 is an internet advertising, intent-based internet ad network called Red Arrow. 1 is an SEO optimization platform called Bright Edge. Exactly Corporation is a software as a service application software company in the sales performance management space. And Wild Pockets is a spin-out from Carnegie Mellon's Entertainment Technology Center that is a web-embedded 3D development platform.
Wow, that's good.
It's a mouthful, isn't it?
Yeah, very interesting range of stuff.
They are.
Now, going back to the white paper that we mentioned at the start, is that available for download from the Illuminate website?
It is. If you go to just illuminate.com/whitepaper, you'll find an opportunity to register to receive it there.
Terrific, that's great. So moving on a little bit, I'm seeing a pickup in activity in the Valley at the moment. What sort of things are you seeing from where you stand?
Yeah, I think it's a very exciting time to be investing. It's probably a great time to be an entrepreneur if you are one that can bootstrap your company initially as well. But the bootstrap piece of it is quite relevant. What I'm seeing from an investor perspective is that many businesses now, particularly in the areas that we most care about within the software as a service and digital media, real-time analytics, some of those areas, are able to build their businesses quite frugally. I don't know how else to put it. They're because of cloud computing, because of open source software. Unlike when we started Scopus or Vivant, the company I founded, when you needed $250,000 just to buy a database license and a server.
Right.
For $1 an hour, you can start running your application in the cloud. The businesses are much further along when they're seeking venture investment. What that means as an investor is that some of the risk has been mitigated, whether that be technology risk or customer or market risk. It may be even some combination of all of those. And we're just seeing some very exciting businesses.
Are there any particular market sectors that you think are particularly hot at the moment?
I think this whole real-time analytics area is fascinating, and it's growing rapidly. If you look at our own portfolio, 3 out of those 4 companies have a real-time aspect to them. So Exactly is allowing people to compensate their employees and literally allow salespeople in real time to assess and even pro forma what their pay would look like, but depending on various selling scenarios. If you look at BrightEdge, they can in real time help a company literally optimize their SEO performance relative to their competitors. Very exciting. A company we're looking at that we'll plan to invest in later this quarter is doing analytics around the whole web marketing world and allowing people to do optimization of pricing and merchandising in real time. Those are capabilities that may have existed in the past, but they didn't exist for mid-market companies. They existed only for the largest companies who could afford to spend millions of dollars for those kinds of solutions. And even then, they weren't real-time. But if you look at what sensor networks allow us to start doing, or what Twitter and other real-time networks allow us to do, I think there's going to be some very exciting businesses there.
It certainly sounds like it. And something that I read relatively recently was that the valuations of companies at exit, both through M&A and IPOs, is rising significantly compared to 5 and 10 years ago. What sort of impact do you think that's going to have on the venture capital industry and the startups?
Well, I think it will likely have a very positive impact. Venture capital tends to be a fairly cyclical industry, and when you don't generate liquidity for your investors, it's difficult for them to put more money in. There's a hesitancy as well as a direct correlation between having available cash to invest into new startups, into new companies. So I think there's a very significant benefit to the entrepreneurs themselves who are going to realize better returns, and to the investors as well.
Okay. So do you have any insights with regard to an area that seems to be very hot at the moment, which is clean tech? We've seen some valuations there, amounts of money being put in, going up very substantially. Do you have any views on that side of it?
I want to be careful in terms of my views because it's not an area that we invest in.
Okay.
It's not an area that I have a great deal of knowledge of. I would say that standing on the side, it does make me a little concerned that there may be, their own bubble forming there if there isn't some caution and, care in terms of the valuations put on these companies.
Okay. So that's not an area you see yours in. No. Oh, okay. Now, with regard to the venture industry as a whole, we had the annual National Venture Capital Association conference was last week. What's the mood of VCs, and how do you think the industry is changing?
Well, there are perhaps two different questions there. In terms of how the industry is changing, I do think that the need to have an alignment between investors, limited partner investors, and the venture capital firms is coming to the forefront. And the data that I've seen recently, and I think it was shared at NVCA as well, is that smaller firms not only are driving better performance than all but a very few of the largest firms, but that investors from a limited partner perspective are also seeing a better alignment there. And so if you look at over the last 12 months at the level of new fund formation and new funds that are being follow-on funds for existing firms, the numbers are down quite dramatically, almost 50% from 2008, 2009 as compared to that. So that will without doubt have ramifications in the industry, and I think there will be some fallout. I think there will be some smaller funds in future, and I do believe there will be a stronger focus on the alignment between not just LP investor and GP investor, but also with entrepreneurs. I think it's a full circle that all those elements have to be combined. Okay.
There's another factor that comes into play as well. I mean, typically venture firms would try to invest in 20, 25 companies over a 3 to 4 year period. I've recently seen an analysis of angel investing. I have to say it is angel. That's been done in a very detailed way that says that the optimum number for an angel to invest in is anywhere from 20 to actually 150 companies. So it's very much a portfolio and a numbers game. Do you see this type of little money in lots of startups also moving into the venture capital field, or do you think it's not changing much?
I think it's unlikely, and I think it's unlikely for several reasons. Angel capital, seed capital, if you will, is the highest risk capital that exists. And the fact of the matter is that you have to expect a much that the churn rate or the failure rate, if you will, is going to be higher there than it is virtually anywhere else in the venture or equity funding ecosystem. So you have to plan for larger numbers there because of the risk of failure.
Okay.
When a venture capitalist comes into an investment, they have to plan to maintain, even if they don't do it for every one of the companies, but they have to maintain a certain ratio of dollars to be able to follow on and retain a certain percentage ownership in that business. If they don't do that, even the best company isn't going to return sufficient funds, sufficient capital to the fund to generate the kind of returns that are expected there. So the other piece is that angel investors frequently expect to come off the boards at the point in time that a venture capitalist enters. And as a VC, you can only sit on so many boards and be efficient and effective, actually add any value into those businesses. So there are just limits because of that.
Okay. All right. That's interesting input. We're running out of time, unfortunately, and it's been great to have you here, Cindy. Are there any last words of wisdom for the entrepreneurs watching the show?
Well, I think, as I said earlier, I think it's a great time to be building a business. I believe that there are some exciting technologies. I think it's a time when you can build a company to a certain point in time when you actually know whether it's appropriate to take venture capital or not without seeking outside investment, or at least not substantial outside investment. And I believe that can really be favorable to entrepreneurs.
Okay. Cindy, it's terrific. It's been great to have you here. Thank you very much for coming along. Wish you success with Illuminate Ventures. And again, thanks for talking with us tonight. Much appreciated.
Thank you. My pleasure.
Okay.